Hi everyone, this is Dimitri Pargamanik with MarketChameleon.com. I wanted to go over how to select candidates for a bullish call spread. And one of the problems you might be facing is when you're going to select a bullish call spread, there are many different combinations, tens of thousands of different combinations of potential call spreads that you could do if you scan the entire market. And let me just show you an example really quickly. I pulled up a debit long call spread screener. I only have one expiration selected here, the October 18th expiration. As you can see, there are 31,900 potential call spreads. So I have it sorted right now by market cap, and you see Microsoft call spreads are popping up here for October 18th expiration. And as you can see here, you have the 134, 138 call spread, 134, 137, 134, 139. So many different combinations just in Microsoft alone. So you could imagine when you scan the entire market, you have tens of thousands of them. And let me just expand it right now, and let's look at any expiration that expires within the next 30 days. So it's going to look at multiple expirations as long as they expire within the next 30 days. And we're going to see that expand even further. And the goal is, well, how do you narrow it down to the best call spreads? How do you narrow it down where it meets a certain parameter and you want to see the best ones for that particular stock and have them all lined up in one place? So over here you could see I just reloaded the expirations, all expirations within the next 30 days, and now we have 177,863 potential candidates. Now, so the next thing we want to do is narrow it down. Now, of course, if you want to just look at stocks that are in your watch list, if you create a watch list, you have like 20, 30 stocks, you could do that as well. You can just choose on my watch list, or stocks that are potentially just like in the S&P 500, Dow Jones. You could narrow it down that way, but as you can see, Microsoft alone, and I'm just going to filter out just Microsoft call spreads, the ones you could do, and we'll take a look just in that one stock alone. How many possibilities do you have in one stock? So even if you have 20 stocks in your watch list, or 30 stocks, you could see just in one stock alone there's 445 possibilities. And you could see, you could go just going through all the pages, there's 18 pages full of call spreads to choose from. So I'm going to let go of that. And one of the ways that you could do is, first you want to set them up and use some of the parameters, and then what you want to do is use one filter that finds you the best call spread based on a certain criteria. And I'm going to show you how to do that over here. And as you can see, there are different views. I'm just going to look at the summary view here, and these are the most important ones over here that I want to concentrate on, and that is over here, we see for this call spread in Microsoft, October 25, 147, 150 call spread. Right now, it would cost you 37 cents to buy this $3 call spread. The theoretical value that we calculate is 97 cents. So this one looks like it has a lot of edge, because it's worth, if in the long term, the expected value is 97 cents, and it's 37 cents now. That's 60 cents of theoretical edge, and when you divide that by how much you have at risk, 37 cents, you see that you get 162% theoretical edge, and that's based on historical data and historical price return distributions. And we talk about that in other videos, and if you're interested, you could just load that analysis, and it goes through the study here, how it uses the historical data to calculate a theoretical value of 97 cents using historical price return distributions. And of course, then you have the historical win rate of 43.8%. And then we have, the maximum amount you could gain on this spread. It's $3 call spread. You pay 37 cents. If Microsoft takes off and goes above $150 here, then your max gain is $2.63. That call spread will be worth $3 minus what you paid for it. That's your gain. So I'm going to first do kind of a general scan, and then we're going to look for and then we're going to use a filter that's going to find us the best either by edge, by win rate, maybe the return if the stock is flat. So for example, let's just take a look at what if the stock is flat and we just want a positive return. In other words, if you have an in the money call spread and the stock doesn't even have to go up, as long as it's right at the same level, win at expiration, a little bit higher, maybe even a little bit lower, you still can make money. So let's just take a look at that, and I'll put 10% just as an example here. And what it will do is look for call spreads that yield at least 10% if the stock is flat at expiration or higher. And then we'll take a look what that means. So see here, Microsoft's 139.10. You pay 178 for the 137, 140 call spread. And if the stock is flat at expiration, then that will be an 18% return on your risk. So over here, you add $1.78 to 137. So that's 138.78. If Microsoft finishes at 139.10, then you bought the stock a little bit below there, and that's an 18% return on your risk. So you could even make that higher if you want, 20%. And as you can see, even Microsoft alone has a bunch of different possibilities: 53%, 25%, and so on. So you want to be able to have a filter that could potentially just show me the best ones by return if flat. I'm gonna do this since we started with the percent return if flat. What we want to do is first we always want to look for spreads with a positive theoretical edge. And the reason for that is, unless you know for sure that the stock is going to go up and you're very confident in the direction, you kind of want a positive edge in the long term. You want the odds or the math to be in your favor. So I always set this to positive edge trades, and I'm going to put in, let's say, at least 5%. Now it's going to look for spreads in all these stocks of at least 5% edge. And then what I'm also going to do is let's look for a high frequency of win. And what this is, the win rate is saying that if you did this similar spread in the last 4 years, we're using 4 years of data, but let's just change that to 6 years of data. So now I'm looking at 6 years of data. I'm going to come back here. Based on 6 years of data, it's going to recalculate this, all the analytics automatically for you in real time. So here, what this is saying is, if you did this similar spread in Microsoft for 20 cents with the stock price the same distance away from the strikes with this amount of time to go, then on average at expiration, the end value was 50 cents. Now it's 20 cents. And if you did it at 20 cents, then historically your win rate, or the amount of times that it was higher than 20 cents, was 20.8%. So I'm just going to take a look at that really quickly. And as you could see, 8.3% of the time, it would have been at $5, 12.5% of the time, 67, 79.2% of the time, it ended up being 0. So let's just make this win rate. I'm going to make it, let's just do it above 70%. So now I have a 79.2% win rate. I have 66% theoretical edge. And as you can see here, I still have a lot of possibilities just in Microsoft. So just to go to the next symbol, look how many pages I have to go through. Now, what I'm going to do is say, show me for each stock, given these parameters, show me the best one, based on the return if the stock is flat. So I want the highest return, given all these other parameters, the highest return if the stock is flat. So here you go. For Microsoft, October 25th, the 137, 139 call spread, it's a 60% return if the stock is flat or higher at expiration. For Apple, you have 61% return for the November 227.5, 230 call spread. Facebook, 66% return, 177, 180. So now you could see how quickly, now for each of these stocks, we scanned it out, which would be impossible to do by hand. So any one of these stocks, now it's all sorted by market cap. Of course, you could just do your watch list or use any of these other parameters, but now you have the best one based on return to flat. Let's just say I'm going to let go of this, and let's say we're looking for a theoretical win rate above 70%. So we just want to make sure that historically the frequency of wins has been above 70%. So now you can see I let go. Microsoft is starting to pop up everywhere. I'm looking for a return, if it's flat, let's just say 10%. And now I'm going to look for the ones with the highest theoretical edge. So now we have return to flat, 10%, at least 10% return if the stock is flat at expiration. We want the historical win rate to be 70%. And now I'm going to return, give me the best theoretical edge there is. So the most underpriced call spread given all these other parameters. So I'm going to choose that. It's going to rescan it. And now here we go. For Microsoft, the best theoretical edge, 46%. So here, this one is interesting because this is a negative. Really, we don't want a negative one in Amazon and Google. So that happened to be the best theoretical edge, even though it's negative. So I'm going to filter those out, and I'm going to say I need any positive. I want it to be positive. If it's a negative, I don't want it in my list. So now, as you see, it took it out of my list. So now I got Microsoft, the October 137, 140 call spread. Got 18% return if the stock's flat, 46% edge with an 87.5% historical win rate. So you could see that going down the line. This one's for Apple, November 1st, 127.5, 230, and so on. Now, let's just take this out. I'm going to take this out. It doesn't matter. I don't really care about the return at flat. So then you could see here, some of these are going to be out of the money. Now you got the 140, 144 because here the theoretical edge is higher than the previous one. Let's do another one. Let's say that you still want positive edge. You want a 70% win rate. You don't care about these other ones, but what you do care is a cushion to break even. And so in other words, you want something to be in the money that even if the stock reverses, you have some cushion until you start losing money. So if it goes up, you make money. If it stays still, you make money. And if it goes down to a certain degree, to a certain point, you make money until you break even, then you start losing. So let's try that. What we want to see is what is the best downside cushion given these other parameters. So 70% win rate, I want my theoretical edge to be any positive amount, even by 1%. And what is my best downside cushion? So over here, Microsoft, the November 8th, the 120, 125 call spread. So you see the stock is 139.10. So you have a 10% cushion, 10.2% cushion. In other words, even if Microsoft goes from 139.10 down to 125, you're still making this max gain. It could go below 120. It could still go below 125 by 5 cents until you break even. So you have a 10.2% cushion. But here, you don't stand to make that much. So let's do this. We could say return it flat. Let's add at least 10%. So let's see. So just to make at least here, to make 12% and a 6.2% cushion, that's in Microsoft. You do the 126, 131 call spread November 8th. In Apple, November 8th, 207.5, 212. Facebook, November 8th, 162, 167.5 call spread, and that will meet these parameters. You get 14.9% return, stock's flat at expiration, and you got a 7.4% cushion. So just to put it in perspective, you have this cushion, make 14.9% in Apple, Microsoft. You could see these are high cap stocks. You wouldn't be able to generate those types of returns in a junk bond. And let's see, till November 8th, that is 21 trading days to go. So 21 trading days to go here. Let's do a target of 20%. And here's a target 20%, 4.6% cushion in Microsoft. The 130, 133. Now to make things easier, I'm just going to clear it out. If you want to just start out, you have these presets over here, best return flat, so you could just select these. You could just start out that way. This way it will auto preset these for you. Return if stock is flat, above 10%. Just same way we just did. And then it's going to go reload it for you. And there you have it over here. So this is your starting point. Of course, if you want to look for a specific symbol, type it in here. Or if you want to just load your watch list, just select your watch list, and then it'll run your watch list through these parameters. And then down here, it's gonna pop in the best call spread candidates given all this information. So there you go. So these are all my watch list, and here it is based on best return if stock is flat. So best return if stock is flat, given a positive edge over here. So you could see how I lined those up. Hopefully this video helped, and I'll see you guys next time. Thanks. Bye.